Hello and welcome to the channel. My name is Alex Capana. I created this channel to help a lot of you individuals that are new to trading online to try to make things a little bit simpler for you. Every week I put up 2 new videos going over different topics, talking about maybe the best IPOs to be on the lookout for, different ETFs that are coming up in the future, perhaps things to stay away from, maybe things to purchase. I also do give a weekly top 2 stock picks that I always have in my portfolio. Small disclaimer, I am not a financial advisor. I do not have any type of fiduciary type of credentials. I am a guy on YouTube trying to give you my 2 decades of experience. When trading the market, you should always do your due diligence and research the stocks that you're interested in. I do try to give you my best advice of the best people in the market. I do a lot of research prior to making these videos. So I think I give you pretty sound advice, but again, it is your responsibility to maybe take some of the information I tell you and do a little bit more research. It never hurts, right? Without any further ado, let's begin. Okay, let's get started. So, I'm going to assume that you already know that a company with a low PE ratio is superior to a company with a high PE ratio, so price to earnings. Or perhaps you already know that a company with a lot of cash on its balance books is superior to a company that's burdened with debt. Or how about the old adage that diversify across all boards to have a sound portfolio? You already knew that, right? Okay, let's be serious for a moment. Talking about PE, price to earnings ratio, and diversify your portfolio, that's all easier said than done. There are thousands upon thousands of companies to invest in, to be part of, to be a shareholder, to be part of that company. How do we do that? How do we find the best stocks to choose? First, let's take a look at the 3 types of investors you normally see in the stock market. The first one, you might have an oriented income investor. And basically what that is an individual who buys stocks and holds it for long periods of times. Normally they do this because that particular stock or that particular company pays a very good dividend regularly. Normally these companies tend to be very solid companies, but the growth is not super high. But it's maybe the company have been around for, I don't know, 100 years, and they've had a consistent growth in their dividend payment. Particularly like one company I can think of might be like Duke Energy, ticker, I believe the ticker is DUK. The last time I checked, I think their dividend yield was paying about 4.7%. If you're not familiar how that works, basically, for example, if you had let's just, to keep it simple, you had $1,000 and they're paying 4.7%. They would pay you annually. Sometime they might break it up into the quarters, but basically you would 4.7% of that $1,000, so about $47. So that would be more of an income-oriented type of investors, people who are actually looking to invest in dividend yield type stocks that pays them quarterly or bi-yearly or once a year. It depends on the company, depends on how they pay out. The second type of investor is normally individuals who are aiming for wealth preservation. They tend to invest in maybe blue chip type stocks, very low tolerance for risks. They kind of stay away from those IPOs that kind of fluctuate in the beginning. When they first open up, they're super high and they drop and they just fluctuate all through the market. Normally those investors that are aiming for that wealth preservation tend to veer more towards those blue chip stocks like maybe Apple or maybe IBM, those companies that have been around since God knows when, maybe Marriott. They've been around for a long time. They probably will be around for the foreseeable future. Those individuals with low risk tolerance tend to be a little older, but not always. But that would be the second type of investor. And that third investor, which probably a lot of you guys out there are those individuals looking for that capital appreciation, those stocks that are a lot more risky, probably more innovation type, new technology type of companies out there that are just getting started. They haven't really got their feet steady in the sand yet, but they have growth potentials that can take you to the moon. So that would be the third type of individual. Normally, those guys looking for those IPOs, like if last month, if you are an individual who might have bought into Airbnb, ticker Airbnb. A lot of probably the more aggressive, the more risk takers, the younger individuals out there probably fall into that category. But take this with a grain of salt, because the best investor is an amalgamation of all three of those. It's a culmination. You put a little bit of the individual who's looking for those dividend yields that pays you dividends either quarterly or bi-yearly or yearly. Then you're looking add it in with a little bit of those blue chip stocks like Marriott, hospitality. Right now, hospitality is not doing that well, but it's definitely a market that people will always need. You will always need to travel, and you will always need a place to stay. And then you sprinkle a little bit of that high risk stock because you have to have a well-balanced portfolio to do well on those days that maybe this particular sector is not doing well, but this sector actually kind of balances out your portfolio. These are just the three general type of investors. Of course, there's a lot different ways that individuals invest, but these are just the three general investors. Okay, for me, before I invest in any company, the one thing I need to have, or the one thing that company needs to have, is something that interests me. For example, if I have no if I don't like pizza, I'm probably not going to invest in Domino's Pizza. Not that they don't have a good product, and perhaps they have a great management team, but me personally, maybe I don't have an interest in pizza, so I probably wouldn't look at companies that I don't have interest in. Also, what I do is I like to look at the individuals who've been in the market for decades back. I look at the Warren Buffetts, the Charlie Mungers of Berkshire Hathaway, even Catherine Woods of ARK Investment. ARK Investment deals in disruptive innovation. Great company. I'm not sponsored by them, but it's a great company. You should maybe check it out. Also, I look at the management team. Who is the management team? Where were they before? What are their plans for the future? How are they running the company? That's kind of like just the first step that I look at before I invest in a company. The second thing that I normally look for next is I tend to choose exchange traded funds. Those are the ETFs. I like that passive income. Sometimes they might not have the best dividend yield, but it's a consistent growth, perhaps yearly or bi-quarterly. I tend to look at ETFs with pretty steady gains over a long period of time. One particular one that I do have in my portfolio right now is ticker VFV, which is Vanguard Holdings. If you take a look here, you see this is an S&P with the top 500 companies, and perhaps you want to buy, you want to get Apple stocks or Microsoft stocks or maybe Tesla on this list right here. For me, maybe I don't want to buy a stock or Amazon is trading at $1,700. Maybe you might not have enough to purchase a full share. But if you invest in an ETF like Vanguard, you can buy a portion of that company. You can buy a portion of Amazon. You can buy a portion of Microsoft or of Apple. So an ETF normally has really great passive incomes with really great dividend yields where you're getting, sometimes they might pay quarterly or bi-yearly. Most of the ETFs that I have are normally bi-quarterly or yearly. Another thing I do is I sometimes use a screener filter, which is basically if I'm looking for maybe ETFs, or I'm looking for biotechnology, or I'm looking for utility type traded stocks, you can actually use filters. I believe a lot of the apps like Robinhood or Webull or whatever particular app you're using, they will have filters to kind of break down what you're looking for. Sometimes I use those, but not too often. But for a lot of you individuals who are new to the trading, there's some really great filters on those apps that will actually break down the category of the type of stocks that you're looking for. Perhaps one of the last things I look for before choosing to invest in a stock is I look at the bloggers, I look at the analysts, I look at what's out there on the news, what's going on with the company, what's going on with the CEO. I look at their balance sheets. I try to get as clear picture as a company as possible. But again, it's a kind of a whole amalgamation of information before you choose a stock. You kind of put it together in this bubble to kind of figure out if that's something that you want to invest in. The point I want to leave you with in this video is a comment made by Charlie Munger of Berkshire Hathaway many, many years ago. He said, "What is obvious to some might be obviously wrong." And what that means is, just because you see a huge dip in the market and everyone is running to it, trying to get in as fast as they can, to you it seemed like it's an obvious buy. But it might not be. You're just following the crowd. You're not doing your own research. Don't just go towards something because it looks like, oh, it was $100 last month and it dropped to $50 this month because of XYZ, maybe an epidemic that might have happened in the past. And you think, oh, well, it was $150 6 months ago. Now it's $50. This is definitely going to jump back up to $150. Don't do that. Do research. That company might have lost how much XYZ amount of money, and their financial future might not be so sure. You don't want to blindly invest in a company just because you think that their stocks is going to shoot back up to where they were 6 months ago. If you like this video, consider subscribing, hitting that like button, send me a comment if you have any questions for me. I do upload 2 videos every week, and I really look forward to talking to you guys in the future. See you next time.